Hey guys, Joel Franklin, market analyst for YouTrading. And in today's video, we're going to be taking a quick look at a trade idea that I'm currently monitoring. It is to do with the not the S&P 500, the Nasdaq 100, the tech-heavy US index. This is actually a CFD that tracks the price of the Nasdaq 100. But you can see here that it's at a very, very interesting point, technically speaking. Let me explain why. You can see we've been in this downtrend since December 2021. 3 touches of that downtrend, very, very well respected. We're also approaching the 200 DMA there in green. And we're also approaching the 23.6% Fibonacci retracement from the 2022 low back to the 2021 record highs. So really, really key area of resistance that we're currently probing. Looks like we've actually broken above that downtrend, but still not above the key fib level or the 200-day moving average. And as you can see, this key fib level, very important area of resistance in November through to December 2022, and the 200-day moving average has been a very important area of resistance going all the way back to last January, so more than a year now. So just speaking from a technical perspective, if this index can break above these levels, you'd be looking at a potential rally back. Well, I mean, you'd be talking about these September highs here, around 12,800. Potentially, you could even be talking about a test of the summer highs that we hit in August, around 13,800. That's a big rally from current levels. How much of a rally would that be? 16% rally. That's a lot. Does the fundamentals or do the fundamentals justify such a move higher? Well, the tech earnings season is about to kick off with Microsoft and Tesla, and a couple of other big names. And, if that does massively exceed expectations, then I suppose you could make the argument for an upside break. But, we're in an environment where we've had loads of these tech companies laying people off recently. You've got data which is showing that the US economy is continuing to slow. Yes, the outlook for Fed tightening towards the end of this year in 2024 looks more likely that it's going to be rate cuts to support growth as inflation comes swiftly lower. And that is very important for tech stocks because if it means a weaker dollar and lower yield, then that could support valuations. But be careful out there, guys. Like this is going to be more of a technical trade than anything for me. I'm not sure that we're fundamentally speaking, we can start a bull market back to the record highs just yet. Still a lot of economic uncertainty, but if we do get above this key resistance area, what I would be looking for is, say we rally up to like around there, then we get a bit of a retracement lower again, then I'd be looking for confirmation that this support is holding, add to a long position, and then I'd have a couple of short-term bullish targets. But like I say, I'm not super confident about a long-lasting rally just yet. I was reading a thread on Twitter this morning talking about the 2000 to 2002 bear market, which in the Nasdaq saw apparently quite a few times there were these 40% rallies from lows for then the market to then reverse and then hit a fresh low. So, how much would this rally be if we got back from the low to my profit target? That's a 32% rally. So, historically speaking, it wouldn't be unprecedented to see a rally back to this area and then over the course of the next few months another drop back to fresh lows. Am I predicting a drop back to fresh lows? Actually, I'm not, because of the easing outlook for the Fed. I think we are justified at about how much higher are we again? 16% higher from lows. I think it is partially justified. 13.5% above recent lows. But yeah, it's just I'm a little bit skeptical at the idea that we're going to have a massive, prolonged recovery. But yeah, anyway, guys, that's my Nasdaq trade idea. I hope you all enjoyed the video, and I will see you all in the next one.